All right, cool. So thanks for joining us, Tristan. I know you got quite the background, starting Storefront. So from like an operator experience, raising capital there, and then also at 500 startups. So you just want to share more about your unique background as a marketplace kind of operator investor, and then also some insights with us.
Yeah, definitely. So yeah, thanks for having me. I'm a big marketplace proponent, and I've lived that marketplace life, the chicken and egg life for quite some time. I originally actually started out working on a media company for social impact in Minneapolis, in Minnesota, where actually I'm now, and where I've been kind of cooped up during COVID. And then I got into, after that, being really excited by what impact you could have in different industries. Got into urban innovation, started this company called Storefront. It's kind of like Airbnb for retail, and then that's what brought me out to Silicon Valley. And we raised a little, right around 10 million for it. And in a couple of rounds, right now we sold it to a French company that's still running and operating it, and so got a lot of that experience. And then as that transition took place, started working with one of our investors, which was 500 startups, and invested in a bunch of marketplace companies through them. Havenly or Backlot Cars might be some that have hit some higher peaks. In as far as Havenly was a marketplace for virtual interior design, and Backlot Cars was taking the old school way of doing auctions with cars online. And I think both have raised somewhere between like 20-40 million now. And so a few years later. And so I've spent kind of time, on both sides of the table, raising around 10 million, investing about 30 million. And a lot of that was around marketplaces.
Yeah, yeah. So that's quite the experience. So what would you say was some kind of like unique challenges that you guys faced, maybe on the operator front, kind of in the beginning of Storefront?
Yeah, I think, probably a challenge that every startup has is, how do you actually get it off the ground? And I always like to, calm people's fears a little bit, because it seems like this huge ledge that you have to get over. But at the end of the day, it's one little step at a time. And so I think when we first started thinking about Storefront and building out what that was going to be in our minds, we literally would walk the streets in Minneapolis and talk to store owners. And then eventually we had our own business cards that we'd hand out to them and try to get them to sign up. And then there was a form where we would kind of push people to this form and try to gauge interest of where not just where stores could be listed on the site, but where who would be interested in renting stores and what markets they would be in. And so we kind of took it, step by step. We call it smoke testing,
Mhm.
and like eventually got to MVP, which is what got us into Angel Pad in San Francisco and moved our operation out there.
Yeah, yeah. I think quite a few of the marketplace operators here can relate in the unscalable ways of onboarding supply and generating demand like that for sure. So what was so kind of in that time period? What was it like, kind of in the early stages? Building, I would say, building supply, focusing on generating demand, and then being a part of like Angel Pad and 500 startups. Like, how would you describe that kind of experience going through an accelerator, kind of building a marketplace and managing all the dynamics?
Yeah. So I guess, picking it up where we left off, then getting into Angel Pad, we got in there very early stage. I think it's hard to get into accelerators that early.
Mhm.
These days it's a lot more. Yeah, it's not like we had a ton of traction. I think we hit some things at the right times. One was that breakdown of Craigslist, and no one had really been tackling the retail space at, beyond just a general real estate listing platform. And so we looked at, like, I think we hit some trends at the right time, as well as like the sharing economy moving into the B2B sector. And then there's also just like something that we really were really passionate about. I mean, we kind of started this whole thing out of we being creators and working with creators and having families of creators and seeing friends try to do pop-up art galleries and be kind of screwed by the real estate agents, and
Yeah.
they'd have to rent it longer and more expensive than they would normally. And so we were like, well, how do we open this up? And I think so all those things kind of hit at the same time, and that's what then led us to get into Angel Pad. And then we basically, that was 12 weeks of just trying to really crank out a functional MVP, not just like this like listing platform, but a real marketplace.
Hmm.
And then get our first customers. And we actually did things that don't scale, like renting our own space and then renting that out to other brands or creators or artists. And that was the way we kind of hacked it to make it more affordable and less friction in the early days. And so we did a couple of those, like in the Westfield Mall in downtown San Francisco, near the end, when we were also going out and fundraising, just to get that process going. And I think that happens a lot with marketplaces, is seeding your own demand sometimes.
Yeah, yeah. No, I followed you on social for a while, so I knew that was like a commonality we had as far as creative and being in art and whatnot too. So, but yeah, so you worked with some pretty big brands though there. So can you maybe describe how that was as far as working with those bigger brands? Was that like a personal kind of relationship? Were you just leveraging those, or did you have kind of like a sale, like someone in charge of sales in place or brand relations? Can you maybe describe a little bit more of that?
Yeah. So we worked with brands, everyone from like Nike and Smart Car to Kanye West when he was doing his Yeezus tour. So we worked with a lot of really interesting people. It really didn't come from contacts. It really, we went out and early on, I think it was definitely that little bit of that network. And, we started working with someone who had some connections in the kind of local retail and brand industry, as far as like up and coming, maybe like 1 to 10 person companies that are doing something in fashion. And fashion was a huge category for us. But then I guess probably the interesting part, and maybe what was a little bit more scalable, is eventually we kind of started this mass personalized outreach. That's something you can't really do in consumer, but B2B you can still do it if you have a valid way. And you probably get bad emails like this all the time, like coming from salespeople that are just like continually drip campaigning you and trying to get you to do some sort of try some sort of software. I think we tried to come about it in a more of a helpful sort of way. And so we would go out and we worked with a lot of e-commerce companies. And so we go out to like platforms like Shopify or BigCommerce, and we do some scraping and get, basically clean that data. At one point, I think we had 20 people on our Philippines team, kind of going through this process, and just a few people in our office that were literally like, entry level college grads doing the sales, but they were really smart and hustlers. And we were able to get, good data. And that process was like quite inexpensive and worked for us for a while. And we, used it even post Series A in order to get continually build up leads. And we do things that were more, I guess the messaging itself would be more, offering something. It wouldn't really be trying to sell anything on the first contact. And so I think that's why I was more successful, because we were a little bit more patient, and knowing that a marketplace takes a while to build.
Yeah, yeah. No, that's great. Do you have any kind of, because I know you're pretty big as far as on building community. Do you have any kind of maybe unique insights or tips that you could share that work for you as far as like, maybe on like social communities or whatnot that you cultivated?
Yeah. I like to think about community, and at least, and also my last two startups is coming from it from like a movement building sort of perspective. How do you build this great movement that's greater than the company itself? companies like Airbnb or Lyft, they've done that in a way where there's this really strong culture internally, and they really project that out, and they build strong culture with their customers. And I think that creates this greater movement of like how people are helping each other and working with each other. And so, for Storefront, we thought about how are we helping the most creative people in a city actually have a voice in that urban dialogue, actually be able to take advantage of these vacant spaces or potentially creative spaces, and how that's not just great for them getting that opportunity to grow their business, but also the greater community being able to see and experience more of these people that might have went, completely dark, go selling on Etsy or something, and you don't even really know this person in your own building is doing something like this. So we tried to start thinking about, why do we really care about this business? What's the real impact we can have on cities and the creative community? And so that can funnel, and once you have that idea and that message, and you have a real like meaning behind what you're trying to do, then that can funnel into different aspects of business functions and growth functions. And one of those could be content, and how do you talk to the press? What do you put on your blog? What are your engagement points with your customers and your greater community of people that are interested in using your product but maybe haven't used it yet? Another aspect of that, is like these, doing meetups and events. And so we did a lot of different types of meetups, featured our community members, helped them tell their own story and how the platform worked for them. So, I mean, that was amazing once we were able to get to that point where we had some of these amazing stories of people being able to grow their business by opening up pop-up shops through Storefront. And then we did these awesome city launches, and those were that was kind of like we'd start building supply kind of over a 6-month process, going into Chicago or New York or LA. We'd start building up a supply over 3 months. Obviously that would continue, and then after 3 months, then we'd start building up some demand, and then we'd launch, do like a big city launch where we do a press push. And we do this giant event where we invite a lot of the early users and also, just kind of the creative community to these events. And they were really awesome. I'm a big fan of even just, team events like team retreats and things like that, because I think they just, really, they put a face to names, and they really build this trust and this transparency in ways that it's hard. And so I guess also in this climate, it's an interesting time to how do you continue to build that trust and transparency online and online events and things like that.
Yeah, that's great. So yeah, I don't want to focus too much on Storefront because you've done so much since then too, I feel like. So what, kind of after that, what was like the kind of next step for you as far as, your marketplace experience?
Yeah. And so then, after Storefront, then started working with 500 startups, work with them for a few years, and then also kind of over the past couple of years, took it to the road and helped launch a couple of accelerator programs in Moscow and Saudi, and great experiences. And also, worked with a variety of other investors and accelerators, and so saw a lot of that side, and it gave me a chance to help entrepreneurs where I didn't really have the time as a founder, and it allowed me to get a little bit more involved on the mentorship side of things, which I really appreciated.
Nice. And then I would say, so how did your unique kind of insights, I would say from like an operational side, how were you able to kind of transition that to, I think, not only help maybe other marketplace kind of founders navigate, but kind of directly add value at different stages? Did you like immediately kind of focus on like a certain stage and kind of dig in and help on community, or, how did that kind of play out?
Yeah. I think it kind of, I guess going back to that, it gave me a chance to start to put things together. So and take these frameworks out of my head, and like the strategies I'd use to do things. So I started blogging a lot, and still trying to continually get that out on Medium or my personal blog, and then working with companies. Generally, I'm always like working with early stage companies, anything seed, Series A. That's kind of the sweet spot. And I think everyone's problems are, they can be unique, and there always can be similarities between things. But I think it's just that early stage is really exciting because you get such an opportunity to brainstorm and think creatively, and it's really like true startup life in
Yeah.
that sense, where you can just keep testing, experimenting things on a weekly basis. And yeah, so I don't know. I think I tried my best, but honestly, a lot of it is in accelerator programs is startup therapy, and you're just like, on a daily basis or weekly basis, you don't know what you're gonna run into, and sometimes it's people, and sometimes it's people problems or co-founder problems, and sometimes it's growth problems, and a lot of times it's also fundraising problems, and so we would focus a lot on those aspects of it in the 500 program.
Yeah. Yeah. So to kind of maybe speak on like the fundraising process, as a marketplace, do you have anything maybe that, a huge lesson that you learned maybe as a founder that then you brought to the accelerator program to help the other founders like internally that you could share?
Yeah. Yeah. Fundraising process. So, I could even talk about maybe a little bit how it was structured in a
Yeah.
500 program. And then what my kind of take on it is. And so generally I think, and even actually in angel pad, going through angel pad, a lot of accelerator programs, there is a strong focus throughout the program, even if it's different, like connections to fundraising and to what that next big step is once you get to demo day and you get to the end of the program. And so with 500, there's pitch, like nightly pitch prep starts to happen, even before halfway through the program. Getting a lot of times it starts out where you need to like continually over and over again go through your pitch and your one liner, and and just make sure you're pitching in the right way, because I mean that's also really good for understanding investor audience, and that might change slightly, but also to your customers and your selling tactics and the growth side, and making sure you're whatever the marketing copy to the BD deck is going to be actually spoken in the right way. That's really, because it's funny because you as a founder you get really deep into it, and you sometimes don't always know how to articulate what articulation will resonate as you start selling, and also that changes when you talk to investors. And so sometimes also it's harder to step out of that's the sales, the head of sales act, and then move on to, hey, I got to talk to investors now. And then as you get closer to demo day, and we would start going into like bringing in friendly investors. So I always I think you think about fundraising as a timeline. You want to start with friendly investors, and then maybe you move to investors that that you don't know as well, but also they aren't like top tier investors, and that's probably angels first, and then you move into VCs, or micro VCs first, and then more traditional VCs. And you always start with like the least, whatever, if you want to call it dumb money or whatever, you start with like the easier people first and move on to the harder people. And so if you structure that whole thing together and you practice your pitch 100 times and you tested it, then once you start this process of outreach, and you have this target list of 100 200 investors that you want to talk to, and who can make those introductions, assuming just, I think basically the the science of it is treat it like a sales funnel, and make sure that you always have your top of funnel wide enough. I think that was probably the biggest mistake when we went raising our seed round, and then our like kind of 7 million Series A. Like even when we were kind of talking and keeping up with investors, and over a process of a year, uh, a lot of those investors never came through at the end of the day. And so you need to keep that top of funnel wide enough so that that you're increasing your odds enough that enough will come down and process through the stages of the funnel.
That's great. So do you have any kind of, maybe something that one specific, I would say like kind of Series A kind of point that might be unique, like as a marketplace to Storefront, that you could share with us?
Yeah, I think, you know, probably the big thing is knowing like the full value of your marketplace. And so, one of those things is like focusing on GMV growth as well as if you can look at supply and demand charts and show that growth on either side, there might be one that you can, manipulate more and be able to, like, let's say for supply, like, okay, we know we can onboard supply faster, then we can increase our pace of growth. So, maybe there are some months or some parts of the chart that don't look as good on the demand side or vice versa, and then you can impact that and increase it in different ways. And so I'd say, like, when you start going into the fundraising process, like, you really got to think about that trajectory. What can you push early on that you have more control as the marketplace builds, because it is a longer play. um, and also, like, what your unique strategy is. Is it, hey, we have, a lot of the big questions that you'll hear: differentiation or disintermediation, and all the D's, and there'll be a lot of investors will be, what makes you defensible? How are you that different? And I think you have to think about, what sort of lock-in you could get. For us, like, we try to think about lock-in on supply. Why would supply stay with us, and make sure, and then that value can sometimes differ from what the customer actually sees the value as, but the investor might see that value as something that's a lot more powerful. And so, at the end of the day, it's a pitch, right? You're trying to put your best foot forward. You don't want to, do this like Silicon Valley, like, bend the truth too far, but you want to be able to, like, come at it in a very excited way and make you feel like you're, really describe that progress that you've made.
Yeah, yeah. So you kind of also, you mentioned in there as far as like the market kind of changing, and supply and demand and whatnot. So so over the course of time, I'm sure like the market kind of matured as your marketplace, right? And
Yeah.
maybe evolved a little bit. So can you maybe speak to that as far as like how you kind of approach, scaling a company with, just securing funding, and then also the marketplace maturing in itself, and how the market kind of existing market dynamics kind of played into that?
hmm yeah. Yeah, I think, kind of going back to the beginning, we were very early on. And so there wasn't a lot out there. And now you'll probably see 1,000 different types of storefront
Yeah.
models. And so I think we also, hit it's, again, a lot of timing is huge. Sometimes you're just too late or you're too early, and that's why you have trouble getting the company going. Um, or investors have seen too much of it. There's a whole nother investor ecosystem where just things are trending for 3 to 6 months, and once they're done, like the bullish investors take on it first, and then the kind of the fast followers, and then the long tail, and then it's gone, and then you kind of miss your opportunity. And so understanding those aspects of it. But I think as our market developed, again, hitting it at the right time and thinking about how do we build this movement was really valuable, in the sense that as this market, it was some of these terms like pop-up shop were very new or novel. And as things came, developed, and then more people were getting interested in it. And so that helped us naturally, but also we could take aspirational case studies and things like that to kind of, like, really focus on getting the best customers early on, and then telling their stories early on so that we get more of those customers. And I think that's one thing to think about, is what is your ideal customer, and always going back to your segmentation and making sure you're targeting the right customers and figuring out that aspect. We would do a lot of understanding on this, like, supply demand side and these different buckets of customers. And we had, sometimes we'd have 6 different supply side customers and 3 different buckets on this side. And sometimes we'd have 3. And then we eventually got down to like, we just want like these like mid-sized brands. And we want to put them into spaces that actually aren't vacant real estate, because it's too hard to kind of make that process work for those particular customers. But these guys have the biggest cart size, and these guys are the fastest and most easy to turn. And so we ended up working a lot with like event spaces and medium-sized brands, that which it doesn't seem like it, but like a Kanye West would fall into that, because they're trying to do something quick, easy, like 1 to 2 weeks, move out. And so really understanding your customer in that sense, I think is important. And once you have a better understanding of it, then trying to tell those stories so that you're bringing in more of the best possible customer for you.
Yeah, that's great. So I love kind of even going back about the part about, speaking about emphasizing like creating a movement, right? Like, I think that definitely kind of helps accelerate that. Did you feel like that so when you mentioned, as far as like, I would say like coupled with the kind of the point as far as creating a movement behind it. So it's not just saying, hey, we do this one thing specifically and help you with this. And then speaking to kind of like the, maybe the overall demand and kind of helping create that regardless of like what size it is, or sorry, what size of the brand. Did you feel like you were like the case studies were specific to saying like, hey, we do this and, here's how we're good, or here's why you should kind of buy into this concept, right? So was it more about messaging why your marketplace is working, or about the concept that you were kind of, I guess helping them with, if that makes sense?
Yeah, I think probably both things are the same in this situation. Like, we would look at things like, how do you define success for our customers? And we kind of had this like 3-sided marketplace in a sense, because we had someone who has a space, someone who rent that space, but for them, that person to rent the space to be successful, they need customers to come in the store.
Yeah.
And so a lot of those conversations, like, how much do we need to serve that final customer to make sure that our customers are successful? And so I think we started to think about that, going that far as, how do we put people on the right streets that are high foot traffic, and making sure we have quality supply and things like that, because that would end up making our customer who's actually paying us to rent the space more successful. And so looking at those case studies, a lot of times we would talk about, hey, here's how much money that you can make over a weekend. Here's how much, here's how this brand, either they, increase depending on their goals, we'd look at what were our customers' goals in doing this sort of activity. And one, making money, obviously, like they want to sell more products. 2, like they want brand exposure, and maybe they want, press or things like that around it. So we'd look at those and try to build off case studies around, what were the main use cases for someone using us, find a brand that we felt like really resembled something that we wanted Storefront to be, and then tell those stories in different ways, whether it's just like the written, visual side on the blog, or actually having them as a guest speaker at one of our events.
Yeah. Nice. Cool. Yeah. Well, I didn't want to, get too focused and, start peeling things back on that. But yeah, let's open it up maybe for questions for a little bit, if anyone has any questions.
Yeah. Tristan, this is Tate. Thanks so much for doing this. Really appreciate it. Going back to Mike's point about fundraising, I think maybe this is what you were wrangling at. Fundraising for a marketplace is a really different dynamic to fundraising for a physical product, right? And so how do you think about, when you raise an $8 million or $7 million Series A, how you use those funds strategically, right? Because there's a flywheel process. It's cracking the chicken or the egg. It's launching a new market. How do you think about strategically fundraising to support kind of smart growth?
Mm-hmm. Yeah, I think the more you can talk about your unit economics, or having some idea of your unit economics, I might not be perfect, but figuring out, hey, like we can put this much money in and get this much money out. I mean, that's the inevitable, golden chalice of growth. And if you can get at least start to have an idea of like these channels, we know we can use these channels. We've been doing these tests. We know that we're getting, at whatever sort of X multiple on it. I think running those experiments on like an ICE framework, if you're familiar with that, which is like what impact, confidence, ease. And then so basically you could like brainstorm a bunch of growth experiments, rank them by those three things. And then, that can maybe tell you what experiments to run first. That I think coming at it from a higher level point when you're talking to investors, using some of that as like your basis will be how you can talk about that. And obviously it's hard to postulate with investors. I think, if you're like, hey, yeah, and then we're going to be up here next year, doing the hockey stick prediction, it's like, that helps if you actually have some sort of traction already that's growing into it. But inevitably the investors, that will look at that sort of thing, or even like, certain, they'll want to see some sort of basis for a lot of whatever you do. So I think if you can figure out that aspect, hey, look, like we already know, like we put X amount of dollars into this and we're getting like a 3X multiple out of these two growth channels. And like that. So once you're getting to a Series A stage, then, we have some idea of that usually. And then we know that's how we're going to spend some of the money, but also you're going to spend a lot of the money on hiring, and that's also one of the kind of common.
Okay. Yeah, this is something I've talked to Mike quite a bit about. I'm really interested in this like bootstrapping versus fundraising dynamic. And you see some of the kind of big iconic marketplaces of the last 10 years, and they've raised hundreds of millions of dollars, and not very many of them are profitable. And so I just was curious, like how you thought about what's a good way to what's a good framework you use when you were starting kind of your marketplace.
Yeah. No, I think you bring up another good point there too, is I think there's many ways to raise and to grow your business and different types of capital, and more than ever now. So I think that's probably something to consider too. It's not like when we're talking about building a movement, that's one thing, that's one aspect of like your vision for the company. But also there's the founder vision of what sort of control do I want? What sort of equity am I willing to give up? Do I want more people? Do I want to, continue to work for myself? Lifestyle business isn't necessarily a bad name. But it kind of got a bad name for a while in San Francisco. And now people are coming back around and like, oh, look at like Tuft and Needle, the mattress company, right? And like these guys were kind of like, hey, should we take venture capital? And I remember talking to them at Storefront, and they're like, we're kind of trying to figure out this venture capital thing, and they never ended up raising a round, but they sold for like huge multiple, and it worked out really well for them because they didn't have to try to sell for $1 billion company. They could sell for a multi-million-dollar exit, and it works great for the founders. So I think that dialogue is coming up a lot. You see other venture investors that are doing more untraditional models like indie VC or tiny seed or earnest, and they're tweeting a ton, and they're doing all these interesting things, and they're doing it's like somewhere between an accelerator and a VC, but they're also looking at ways to supplement revenue-based financing. And so there's all sorts of really great options. And I think it's, we'll probably see even more coming out of COVID, and, the need for these more alternatives. So I think just always go back peel back the onion to the point where you're like, hey, like this is what I really want to do. And I feel, what I feel comfortable with, what I feel confident with, or what you just want to explore on your own founder journey. And then that will help guide some of those decisions later on.
Cool. Yeah, that's helpful. It's an interesting dynamic as we move from kind of a mindset of growth to profitability. So just curious to get your thoughts. Thank you very much.
Cool. So I think we got like about maybe 8 or 9 more minutes, and I know we have a few people kind of join us a little bit late. Did anyone else have any kind of questions? No, I know I have a few, but
I'll step in. For early stage marketplace, after sales, when you're collecting data from users, are there any really key questions that you think we should keep in mind in terms of talking to investors later on when you really don't have a lot of financial metrics yet?
Like yeah, qualitative stuff you can point to. There's the infamous brand logo slide, which I've definitely used quite a bit, where, hey, it's like, hey, these are logos like that we're either working with, or like these are logos that we have an LOI signed with. Yeah, I think, there's always a way to tell that story. You also could come back and it's sometimes, and maybe it's an appendix slide, but you could say, hey, look, like people love our product, or they're like, we're getting great feedback. We're still early on, we're not charging anyone for it, but like this is the sort of feedback we're getting. And they're like, and like the quotes are like, I can't like live without this, something like that extent, right? Where like you're starting to see something is working. There's something obviously that's really sticky here, and that's getting you closer to this product market fit question answered.
That's great. We got any more? Looks like Chris, you have any questions? Looks like you're taking notes over there.
Yeah, hi guys. Sorry if I am late. It just popped up in my diary at the time, so I thought this was the start. I was a bit shocked to hear it go halfway through. Over in Stockholm in Sweden, founder of a marketplace for Swiss watches. So just interesting on the point that you made earlier about early metrics. Talking to the VCs here in Europe, they're obviously interested in GMV, but for us, it's more we're trying to attract a younger audience than what typically buys watches online today. So I guess my question would be around how did you go about finding those early adopters? I mean, of course, you listen to the Airbnb stories, for example, where they go on Craigslist and they post ads on both sites. But for us with watches, you only really have Chrono24 or Chronext, and they're typically where the watch nerds hang out, so to speak. And we want to attract a much younger and much more, I guess, vibrant audience.
Mm-hmm. Yeah, finding early adopters. So if you have those personas defined and you kind of know who you're going for, then I think the next step is to go and try to find out where these, really engaged people are online, and then start to, engage with them, or like bring them back to, start that conversation essentially, and that could be started in different ways. I was talking about kind of mass customized outreach or sales hacking earlier. That could be one way, is like literally you have yourself, or usually you should do everything yourself once at least, to understand the process and be able to define it. But, you could have a virtual assistant go out and say, hey, look, we're looking for these people. Here's the website. Can you go on here and get the most active people on this website and get their emails? Things like that. And then that could be a way to start the conversation, or you could start engaging on these other platforms in a really subtle way. And I think that's kind of the key part of like the building a movement, building a community sort of thing, because you have to be able to engage in a helpful, thoughtful way, and that can also happen through content. Maybe you can share content, which actually brings them back to your website, but you're not like selling them in the content. So it's more like actually really helpful content for them to figure something out that they have a problem with, or things like that. So I think about that helpful thoughtfulness, I guess, once you like find some of these avenues, these channels, these forums, or other places that your personas that you think would be the best early adopters are, and then try to be super helpful and thoughtful first, and have some of those subtle cues where they could like find their way back to the site. They're like, oh, this is really helpful. Like, how did I find this? Or like, Chris is really helpful. Oh, look at his like subject, his byline or signature line in his email, and it goes back to this other site.
Sure. I guess the catch-22 that we have at the moment, which I guess is faced by a lot of people at these stages, is our MVP doesn't necessarily generate so much value right now compared to our competitors. Whereas what we're actually having development and what we're building is, 10x. So kind of attracting those early adopters to a site that's a marketplace for them to list their watches today, where there's not necessarily much traffic, I guess, is the main challenge.
Mm-hmm. Yeah, I think then, the cliche saying is always, hey, if you can do these things that don't scale, or you can do that, kind of look at these avenues that you can surprise and delight your customers. You can go a step further sometimes. Or you could bring them options, or whatever. You could handhold in ways that maybe big competitors can't. And it could be things like this, like hosting calls with them to give them information that they're not getting elsewhere, building really solid, a lot of companies have launched off of emails, like newsletters, like AngelList did, Product Hunt did, so there's a lot of, I guess, avenues. Maybe there's some things you can test to build value for them that they wouldn't get otherwise. Yeah, I always look at like if you look at like blog content, like look at like the first round VC, like the first round review versus maybe what other, shorter form content does. And I think that alone just builds a really good reputation for them. People see that and they're like, wow, this is like super strong. So sometimes it's worth trying to experiment with like going the extra mile, and then you start to build a reputation just for being this really great resource.
Mm-hmm. Oh, that's really good. Thanks.
Well, cool. Well, I think we have a hard stop, don't we, Tristan? So,
yeah, sorry, I have to jump a little early for another meeting, but
it's all good. I really appreciate taking the time and kind of sharing your experience, because I know you have quite the background. So what's the best way for people to kind of keep up with you?
Yeah. Well, you can hit me up on Twitter at Pollock, Pollock, or at my website tristanpollock.com. Or in the Slack channel. I mean, happy to, if there's other thoughts you have, or you want me to check out what you're working on, just send me a DM in the Marketplace's Slack channel.
Awesome. Well, thanks, man. So so we had a little bit of connection issues in the beginning, but so I'll upload this and then I'll share the link to this in the group. So appreciate it once again. All right.
Of course. Thanks for having me. Thank you, everyone. Good luck with your marketplaces.
Good to meet you, man. We'll have to catch up.
Of course. Hit me up.
Yeah, man.